afternoon. Time to check in on the markets. Asian markets fell earlier on as investors anticipate the Fed's summary of current economic conditions, also known as the Beige Book. The Nikkei in negative territory, Hang Seng Index down 0.9%. We also saw negative sentiment moving through the European markets as investors continue to dwell on the recessionary outlook in that region. Locally, when we look at what's happening from a sense point of view, health and insurance Group Discovery reported its highest normalized headline earnings in its history, topping pre-pandemic levels. However, that share price was down almost about 9% by midday. It's recovered slightly to about 6.8%. And that's because the company announced that it would not be paying ordinary dividends for the full year. And then we also saw share price down with the likes of Tiger Brands dropping as much as 10%, recovering slightly to about 5.5% right now. And that's because the company made an announcement that it had to recall some of its baby products after traces of asbestos were detected in test samples. So they've recalled some of the products as a precautionary measure. But nonetheless, to talk to us about some of the market dynamics, we are joined by Patrice Rassou from Ashburton Investments. Patrice, thank you so much for your time. I mean, this negative sentiment that we're seeing when we look at markets, Europe's dealing with its own issue, Asian markets as well. But what's happening from our JSE perspective? What's driving markets here?
Good afternoon, Nastasia, and to your viewers. Yes, a very cold introduction to the JSE after 8 days of losses on the Nasdaq. We're seeing financials leading the down on the back of disappointing numbers from Discovery, and also quite horrifying news from Tiger Brands that there were traces of asbestos, as you said, in its Purity baby food products. So nothing to keep us really on the front foot. We've also had a number of companies going ex-dividend, so they've shed a large dividend, Sasol being one which was under pressure as a result, down 5%, and really taking its cue from a number of markets around the world which are all posting negative numbers. So the FTSE, for instance, in the UK under pressure, following hot on the heels of Hong Kong opening negative and Australia closing heavily in the red at down 1.4%.
So let's unpack those numbers from Discovery. What did you make of them?
Yeah, I think on the surface, it looks fairly positive, talking about normalized headline earnings up 65 to 75%. I think the problem is that the market expected closer to 90% recovery in earnings. Some good numbers in terms of their life business, with the normalization in morbidity and mortality, which was obviously impacted in the base by what happened during the COVID period. But I think what is really weighing on the share is what's happening in its insurance business, and the Ping-An Health business in Asia, which is posting some quite heavy losses. So Insure, for instance, are reporting losses as a result of what happened in KZN, the floods, and really looking for a turnaround in its Asian business. And the bank also, Discovery Bank, are posting some losses which have narrowed, but probably taking a bit longer to turn a profit. So by and large, on the surface, some progress, but disappointing versus what the market was releasing. And as you mentioned, also the issue of non-payment of dividend for the year.
The PSG unbundling is effective from today. A little bit earlier on, the share price was down 75%. For the benefit of our viewers, let's briefly perhaps unpack what's happened today.
Yeah, so PSG, which is an investment holding company, had indicated to the market that given the number of stocks or holdings that it has, which are already listed, it made very little sense for it to remain a listed company. So it was going to unbundle, simply meaning give back to its shareholders the listed holdings that it has. So that's why we see, in terms of some of the price action, Curo being down 9%, or PSG Consult down 11%, or Capitec. These are the core makes up most of the investment holding company. And what is going to be left in the rump of PSG will be basically the unlisted part. So a little bit of basically excess stock hitting the market, and those shareholders who don't want to keep them deciding to sell them. So not a great day for this to happen, given that the JSE and world markets are on the back foot.
Before I let you go, with most investors feeling bearish, is now the time to be bullish?
I think the key issue remains, and you touched on that, what's happening with the Fed. I think there was a lot of optimism in the last month and a half that the Fed would look to cut interest rates into the beginning of next year. I think the last speech at Jackson Hole by Fed Chair Jerome Powell has poured cold water on these hopes. And I think what everyone is looking or trying to anticipate is when will central banks, especially the large central banks like the Federal Reserve, going to say that they've reached the peak of their interest rate hike, or inflation is strongly behind us. I think we quite a number of months away from that. So we're not quite there yet, Nastasia.
Patrice, thank you so much for your time. That is Patrice Rassou, who is the Chief Investment Officer at Ashburton Investments, giving us his perspective on the markets.